Hello and assalamu alaikum everyone. A very warm welcome to the day 4 of the Advanced Audit and Assurance Practice to Pass webinar for September 2021 exams being organized by ACCA Pakistan. I am your tutor Kashif Kamran. I hope all of you can hear me loud and clear so we can start the proceeding for the day 4 of the webinar. If you can drop your responses in the chat box. Okay, that's great. If you all can hear me loud and clear, let's start on with the proceeding of the day 4 of the AAA webinar. Now, in terms of the day 4, we are focusing today on the 6th of August on two very important areas, one being going concern and one being the data analytics in view of the recent changes in the syllabus. So I'll bifurcate the two areas. Before the break and after the break, we'll be discussing going concern and then the data analytics. And in between the two major topics, we'll continue to discuss many useful tips and techniques which will enable you to be successful in the September 2021 exams. Let's start on with the proceeding of the day 4, the 6th of August. Now, today on the day 4 of this AAA webinar, the focus is on going concern, a very important topic from an examination point of view and has been a regular feature of a couple of past papers. And then the data analytics, the importance of data analytics and how it can impact the papers from September 2021 onwards in view of the recent changes is very, very important. And I would be discussing that in depth with you in the second part of the day 4 today. So let's start on with the proceeding of the day 4. Now, there are two articles for the day 4. One is a going concern article and one is the data analytics article. Throughout my session today, I will be discussing with you the examiner constructive criticism, the examiner do's and don'ts, and we will be practicing the question 2 of the December 18 exam, and we'll have a look at the question number 1D of the December 2020 exam. This is for data analytics. The question number 1D of the December 2020 paper is the data analytics, and the question 2 of the December 18 exam is the going concern. And then you can complete up the remaining answers back at home and concentrate on watching the previous webinars as your home exercise. Now, there are a couple of webinars you can watch on the topic going concern and data analytics. I've already done a session on YouTube on data analytics. I've already given the link of that in my day 1. I hope all of you have that. Or if you missed the day 1, then do watch the day 1 because I give the link of the data analytics session I did on YouTube on the day 1. So that can be really beneficial for all of you. And the reporting webinar links I have given you on day 3 yesterday will be beneficial for going concern, because basically going concern is a reporting topic, completion and reporting topic. So the webinars I have recommended you yesterday on day 3 will be beneficial for taking command on the topic of going concern. Now let's start on with the journey. Let's first focus on going concern up to the first break in day 4 and then focus on data analytics. Okay, let me take on my Word file for the start of going concern. Now, I hope you can all see in front of your screen the day 4 Word file, the 6th of August, and the objective today is to focus first on going concern and later in the day, the data analytics. So let's first start with going concern and see what you need to know about going concern as a student to excel this topic in an exam context. Now, something which is very, very important. First of all, you need to understand there is a fundamental article on this topic written by the examining team, right? and the title of the article itself is going concern. So if you read the article A to Z, you will have excellent knowledge about going concern, and that will really help you solve the past papers. Now, first of all, I would expect all of you that you should read the article on going concern, because that is an excellent article for all the knowledge you need around going concern from a AAA perspective. Examiner will give you every knowledge which the examiner then expects to be asked in the exam paper. Then practice past papers. Practice past papers. I would recommend that there are two good past papers on going concern which you should practice. One of them is the one I am doing in the webinar, December 18, question number 2. And then you can do the December 15, question number 2B. So these are two good past papers on going concern, which if you can do, would really boost your confidence on controlling this topic in exam paper. Now, read and practice. Let's start the understanding of this phenomena in the webinar today. Now, in terms of going concern, you all should appreciate that going concern is a topic which comes at a completion and reporting stage of the AAA paper. So if you look at this topic in the recent times, you should expect this in the question number 3 or in the question number 2. Now, I was discussing that with you yesterday, that since last 2 exam settings in particular, examiner has focused the completion and reporting stage to the question number 3. Before that, examiner used to ask the completion and reporting stage in the question number 2. So going concern is a topic from the completion and reporting stage of the AAA paper. So definitely you will expect this in the section B of the paper, and most likely in the question number 3 of the paper. I'm talking about September 21 onwards, right? So that is something you should be knowing very well. Then secondly, apart from this understanding of this topic, let me put the heading so we can write under the heading. Okay, I hope all of you can hear me, right? Now, the second thing you need to know about going concern is that what sort of a question comes on going concern? What does your examiner really ask for on a question on going concern? So you should exactly know what is the exam requirement on going concern. Then only you can prepare yourself in an excellent manner. Can all of you hear me? Is my voice getting through to all of you with clarity? Okay, that's great. Thank you for confirming that. So the exam requirement on going concern is very important because that will really set the scope of the topic. So if you want to know the scope of the topic, you should know the exam requirement on going concern. Now, when you look at the past papers, the December 18 and the December 15, the question on going concern focus on very diversified areas. First of all, the question on going concern focus on matters which cast doubt on the going concern status of the XYZ company, which is given in the case study. So examiner will ask you, explain the matters which cast doubt on the going concern status of the XYZ company. So you need to read the case, and from the case you need to identify the matters which cast doubt on the going concern status of the XYZ company. Then the examiner is very profound of asking at times procedures on going concern. At times the examiner even asks for evidence you should expect to find in the working paper files, for the cash flow forecast. Because when you are evaluating the going concern means the foreseeable future. And whenever the examiner gives you the foreseeable future of the company, liquidity is one of a concern factor. And you should understand this as a student, that liquidity is a very major indicator of going concern. If the business is not liquid, or if the business is facing liquidity problems, it may cast doubt on its going concern status. So liquidity is a very, very important factor when it comes to the matters which may cast doubt on the going concern status. So many times the examiner asks you, what evidence will you expect to find in the file with regards to the cash flow forecast, with regards to the future liquidity of the business, with regards to the future cash inflows and cash outflows of the business. And that cash flow forecast definitely is given in the case study. You just need to think about what evidence will you expect to find around the cash flow forecast given by the examiner, right? I hope you can all hear me loud and clear. I will be testing my voice in the first 15 minutes of the webinar just to assure that my voice is getting through with clarity to all of you. So you need to tell me that the moment I ask you. Thank you. Thank you for confirming that. Okay, one last thing. The implication of going concern on audit report. The implication of going concern on audit report. And I think a couple of times the examiner has asked a question, why do directors refuse to give disclosure of going concern issues? Why do directors refuse to give disclosures of going concern issues in the financial statements? What are reasons? Why do directors refuse? What are some of the reasons why directors are reluctant to give disclosures of going concern issues in the financial statement? Now, this is maximum. You will not see any other requirement on a question on going concern, whichever past paper you do, whether you do a very old paper, which must have come in 2011 exams, 2013 exams, or the two recommended by me. Whichever paper you do, it will move around the 5 areas mentioned in front of your screen, right? So what we need to focus on: number 1, matters; number 2, procedures; number 3, evidence; number 4, the implication for the report, and why director refused to give disclosures. What are underlying reasons? Let's start one by one, each one of them. Now, when you know the exam requirement, and I will be showing you the real December 18 question number 2 shortly to tell you that how things comes on a going concern question, what you need to really understand is that what I believe is that students are generally too harsh on going concern, number 1, and then the students are very bad in terms of picking the right implication for the audit report in relation to going concern. Now, even yesterday on the day 3, when I was discussing with you a question number 3 from the March-June 21 exams, which was about reporting and completion, there was an issue of going concern in that question yesterday as well. And a lot of time when I was looking at the chat box in front of my screen, a lot of time the students were saying financial statements should be prepared on a breakup basis. The company is not a going concern. Now, these are two favorite conclusions the student normally thinks of. The moment they see one problem in the question, for example, the current ratio has gone down, or they see another problem in the case that one of the major customer has ceased to trade, or one of the major customer of the company has switched to the competitor, they say, oh, this company is not a going concern, and the financial statement should be prepared on a breakup basis. Students are very harsh on their conclusions on going concern. They do not understand that there is a terminology which is known as material uncertainties. Now, if the current ratio has gone down, that is a material uncertainty. If one of your major customer has switched to the competitor, that is a material uncertainty. You need to understand that the company also take actions to overcome the problem. If the customer has been lost, the company will be doing something to get a new customer. If the current ratio has gone down, the company will be doing something in the foreseeable future to improve it. So do you believe that the company will not be taking any action and they will be sitting hand on hand and let the company close down? The directors of the company will not sit hand on hand and let the company close down. They will do something to improve the situation in the foreseeable future. So you cannot just say in the exam paper that the company will close down. We have even seen so many businesses in the world, they have survived even even despite lockdowns, even despite severe restrictions because of the COVID situation. The business has survived. Very few businesses in this pandemic have closed, have ceased trading. So realistically, we have even seen that in this pandemic as well, lots of business still continue because the management took the right actions at the right time. So first of all, come out of the habit of being too harsh on going concern. And when I solve the December 18 paper with you, I will be more critical on that too harsh on going concern statement to make you realize how too harsh you are in the exam paper. Then the students are very bad in picking up the right implication for the audit report. There are so simple situations, right, when it comes to the implication for the audit report. And if you know the situations relating to going concern, which can have an implication on the audit report, that is what? You go down and you read the examiner article. Let me show you the examiner article on the screen. 1 minute. I hope all of you can see the examiner article on screen relating to going concern, right? You scroll down this article on going concern. And in this article of going concern, there is a paragraph where the examiner has given you every possible situation relating to the impact on the audit report. I think that's last paragraph, forming an audit opinion. Can you see this paragraph in the examiner article, forming an audit opinion? In this part of the article, examiner has given you every possible situation and what will be the likely implication of that situation on the audit report. So if you read this, you will not do mistake. But I believe student will still do mistake because they really make mess of a reporting question. Let's see what are the situations. I'm just copying this from here so we can do the analysis. Let me copy the first two and take them on the Word file. So I'm just doing an analysis of the examiner article here. And from the examiner article, I'm just taking a situation forming an audit opinion or implication for the audit report. Implication for the audit report. And I'm just taking this from the examiner article. Number one, look at this very carefully. Examiner is saying in the article, in forming the audit opinion, the auditor should consider two issues. How many issues? Two issues. Number one, have the financial statement been prepared using an appropriate basis of accounting? Number one, has the financial statement been prepared using the appropriate basis of accounting? And number two, is there an adequate disclosure of any material uncertainty relating to going concern? So examiner is saying for a going concern situation, there can only be two issues in the exam paper. One, whether the management has given adequate disclosures of the material uncertainties relating to going concern in the notes to the financial statement, or secondly, have the financial statement been prepared using the appropriate basis of accounting? Have the management prepared the financial statement on a going concern basis when they were appropriate to be prepared on a going concern basis? Or has the management prepared the financial statements on a breakup basis when it was appropriate to prepare them on a breakup basis? So you should understand this and appreciate this. Now let's look at the breakup given to you by the examiner. Firstly, the examiner is telling us, first, the auditor may conclude. Auditor may conclude. So let's see what the auditor may conclude. Firstly, the auditor may conclude in the exam paper that the management use of going concern basis is inappropriate. So you might challenge in the exam paper that the basis used by management, that the management use of going concern basis is inappropriate. So you are challenging the basis of the management, that the use of the going concern basis by the management in preparing the financial statement is inappropriate. This means that the financial statements are effectively rendered meaningless and the auditor should express an adverse opinion on the financial statement. Are you understanding this? So if the auditor conclude that the management use of the going concern basis is inappropriate, that means the auditor is saying that the financial statement should be prepared on a breakup basis, and the management disagree and say no, the financial statement should be prepared on a going concern basis. Now if you have that sort of a disagreement in the exam paper, the eventual impact on the audit report will be an adverse opinion. So is everyone clear with the first situation? Right? Are you all clear with the first situation, everyone? Okay, that's great. Now let's look at the second situation given to you by the examiner, right? Let's go back to the article. Let's look at the second situation. I'm copying the next paragraph. In rare circumstances, Control C, and I'm taking this paragraph to my Word file. In the second paragraph, the examiner says, in rare circumstances. So in rare circumstances, that means it will not be very common in exam paper, where the financial statements have not been prepared under the going concern basis and the auditor agrees with it. Now, what if the management has not prepared the financials under going concern basis? Means the management themselves has prepared the financials on a breakup basis, and the auditor agrees with the management preparation of the financial statement on a breakup basis. Now this is interesting. The management themselves has prepared the financial statements on a breakup basis, and the auditor agrees with management that the financial statement should be prepared on a going on a breakup basis. Now, is there any disagreement in the rare circumstances? Is there any disagreement in the rare circumstances? No, because the management is preparing the financial statements on a breakup basis and the auditor agrees with it. So this is a rare circumstance. See what is the impact on the audit report. The audit opinion may be unmodified. Do you all agree? Because there is no disagreement, the audit opinion may be unmodified. Are you all clear with this? Okay, good. Next, move on. This is so long as the auditor has concluded that there is adequate disclosure in the financial statement regarding the basis of accounting. So if the management prepares the financial statement on a breakup basis and the auditor agrees to that, the auditor will give an unmodified opinion provided that the management has given the disclosure why have they prepared the financial statement on the breakup basis. Will the shareholder be interested to know why the financial statements have been prepared on the breakup basis? Will they want to know the basis of preparing the financial statements on a breakup basis? Right? So this is so long as the auditor has concluded that there has been an adequate disclosure in the financial statement regarding the basis of accounting used. However, the auditor may consider it necessary to include an emphasis of a meta paragraph for this situation to draw user attentions to the financials for the reason of this accounting. So if the management prepares a financial statement on a breakup basis and the auditor agrees to that, and the management gives the disclosure of preparing the financial statement on the breakup basis, how will the auditor draw attention to the disclosure where the management has given the reason for preparing financial statement on a breakup basis? Through an emphasis of a meta paragraph. So please remember that if the auditor agrees to the management conclusion, if the auditor agrees to the management conclusion on preparing the financial statements on a breakup basis, if the auditor agrees to the management conclusion of preparing the financial statement on breakup basis and the basis of preparing the financial statements on breakup is given in notes to financial statement, the auditor will issue an unmodified opinion but will draw attention to the disclosure giving the reason for breakup basis through an emphasis of a meta paragraph. Now, this is what I was expecting. Some students are asking, if it is a listed company, then should we give a CAM? Understand, I was very clear yesterday on day 3, and this is the problem with students. They really make mess of everything in reporting. You need to keep a line between every rule of reporting. I was very clear yesterday that a going concern matter is never reflected in a key audit matter. I hope you agree with me. I was very clear on that yesterday. CAM is not for a going concern matter. Bazla Beg, thank you for confirming me that. I'm really very happy, Bazla, that you agreed with me. And you are the first one who put that statement. CAM is not for a going concern matter. Whether a disclosure is made, whether a disclosure is not made, the CAM doesn't include going concern. You can never include going concern as a key audit matter where the disclosures are given, disclosures are not given, because for going concern, there is an ISA 570. CAM comes in ISA 701. There is a distinct ISA. Right? Is everyone clear now? So whether it is a listed company or whether it is a non-listed company, if the financial statements are prepared on a breakup basis and the auditor agrees to that, and the management has given the reason why have they prepared financial statement on a breakup basis in the notes, how will you draw attention to that very important note? Through an emphasis of a meta paragraph. Now understand something very, very carefully. Let me write this as number 1. Auditor disagree with management preparing financial statements on going concern basis. Number 1 situation. Number 2 situation. Auditor agree with management preparing financial statements Khalid Al Sukun, just wait for 1 minute. What I'm writing on the screen will give you the answer to your question. Auditor agree with management preparing financial statement on breakup basis, and the disclosure given for the basis of breakup, and the disclosure given for the basis of using the breakup basis for financial statement. Have we covered the first and second situation? And has the examiner given us the answer for the first and second situation? Now look at the third situation. If there are material uncertainties, relating to the foreseeable future, however, the financial statements should be prepared on the going concern basis. The financial statement should be prepared on a going concern basis, right? But there are material uncertainties relating to the foreseeable future. If there are material uncertainties relating to the foreseeable future, however, the financial statement should be prepared on a going concern basis. Number 1, the material uncertainties relating to going concern are disclosed in the notes to the financial statement. And number 2, material uncertainties relating to going concern are not disclosed in the notes to the financial statements. Look at these situations. First of all, you need to understand that the situation number one is a very blunt situation. Auditor disagree with the management preparing financial statements on a going concern basis. That means auditor believe financial statements should be prepared on a breakup basis. So that leads down to a adverse opinion straight away, because you are challenging the basis of preparing the financial statement, right? In the second one, the auditor agrees with management that the financial statement should be prepared on breakup basis, and the management is preparing financials on a breakup basis, and the management has given a disclosure not of the material uncertainties. You need to understand there are two types of disclosures, right? One is a disclosure of material uncertainties. One is a disclosure of the basis of the breakup basis. I hope you're getting confused with that. So one disclosure is for the basis of the breakup. So will you give a disclosure? Why are you preparing financial statements on a breakup basis? So that disclosure, if given, and the auditor agrees to that, and the financial statement should be prepared on a breakup basis, and the management has done that, what was the examiner telling us? Then you will give an emphasis of a meta paragraph and an unmodified opinion. But if there are material uncertainties regarding the future, just like the question yesterday, when I think that the license of the railway was about to cancel and the revenue has gone down and the profit has gone down, in that situations, financials are not prepared on a breakup basis because they are simply material uncertainties relating to the future, even though the company is still a going concern, but they have some doubts about the future, right? So if MURGC is disclosed in the notes to the financial statement, what will happen is equal to what? If MURGC are disclosed in the notes to the financial statement, then what will happen? The auditor will add, or auditor will insert a para in the audit report titled MURGC, where the disclosure is highlighted, Is that clear, everyone? And the opinion will be unmodified for going concern. And if the disclosure is not given, if the MURGC is not disclosed in the financial statement, then what will happen? I think I gave you the answer yesterday. Yes, auditor will straight away issue an adverse opinion on the financial statements straight away. So there are two situations in going concern where adverse opinion will come. Look at the situation number one on your screen, adverse opinion, and look at the last situation on your screen, 3B, adverse opinion. In one situation, there will be an emphasis of a meta paragraph, and in one situation, there will be a paragraph known as MURGC, which is right after the basis of opinion paragraph in the audit report. There is no fifth situation. In the exam paper nor in the examiner article. So CAM never comes for any going concern matter, right? CAM is not for a going concern matter. CAM is for a matter which is a risky area. CAM is for a matter which is a significant areas. CAM is for a matter which is an estimate, but CAM is not for a going concern. Even though going concern is like an estimate, but because going concern is dealt in ISA 570, so the implication of going concern is discussed in ISA 570, so has no connection with CAM. Is everyone clear? So will you remember these reporting implications? Will you read the examiner article on going concern for all these reporting implications? The problem with student is they make mess of situations. When they have to use other meta paragraph, they use emphasis of a meta paragraph. When they have to use a qualified opinion, they give a CAM. When they have to give an adverse opinion, they give an emphasis of a meta paragraph. When they have to give an MURGC, they give a CAM. You spoil report. And that is the biggest problem with student, that they never perform well on an audit report question in a AAA paper, because whatever rule they know, they mix them up. You mix the rules of EOMP, OMP, O other information paragraph, MURGC, CAM, you mix them up, and that results in a very bad answer. Every rule is a distinct rule, and you should know it. And I have guided about rules in my previous webinars a couple of times, multiple times. Please watch them so that you know the rules and regulations around audit reporting. But because we're covering the going concern today, so I thought we are very, very clear on going concern. So will you give CAM for a going concern any time in the audit report? Will you give another meta paragraph for going concern? Will you give an other information paragraph for going concern? Okay. Can there be a situation in going concern which results in an adverse opinion? Can there be a situation in going concern which results in an MURGC paragraph? Can there be a situation in going concern which results in an emphasis of a meta paragraph? So will you remember this reporting structure and reporting summary, everyone? So please ensure that you pick the right implication for the audit report rather than making a mess of the situation. And don't be too harsh in your judgments in exam, particularly for going concern. Okay, now let's take next step. Let me put in front of you the exam question, because from that we understand more, and from that we understand what problems the student normally do, right? Let's take on the December 18 paper first, and then let's start discussing the problems you will do as a student, because everything I have guided you, you will start making blunders the moment you see the December 18 paper, because that's the journal student problem. December 18 question number 2, right? That's what we are starting, and I will be giving you the marking scheme of a going concern question as well, because that's very, very important. Okay. Yes. If I have time after I complete the going concern and before I start the data analytics, if I have time, I will spend 10 minutes, not more than that, on clarifying a difference between a modified report and an unmodified report. Because so many times the students are confused what makes the report modified. They're confused between unmodified opinion or modified opinion and modified report. So I want to make a clarification on that, but that would be after I complete my analysis of December 18 question number 2B. I'll try to make a summary, a very good one for all of you. Okay, December 18 question number 2. Okay, I'm not doing it on the practice platform. Please ensure you do it on the practice platform, but I will show you one thing on the practice platform for December 18 question number 2. Can all of you see the PDF version of December 18 question number December 18 on your screen? Okay, that's great. You move down and you go to the question number 2. Okay, can you all see the question 2 on your screen in the PDF format, not on the practice platform? Okay, that's great. Now look at the question number 2 and look at the amount of the financial data which has been provided to you in the question number 2. You can see the balance sheet current year, last year. Then you scroll down, you look at the income statement of the current year and the last year. So much numbers. Then there are some notes. I hope you can see the note number 1, 2, 3, 4, and 5, and 6 on your screen. And then comes the requirements. Now, when you look at the requirements, there are 3 requirements to this question. Let me take these 3 requirements to my Word file. Let's understand them. Let's do the analysis of the marking scheme and then come back solving the question on the practice platform. Okay, 3 requirements, and I'm copying the 3 requirements on the screen. So once forever, you understand the requirements carefully, the marking scheme, and then reading the question and solving the question would be so beneficial. Okay, let's start the analysis of the requirements. Okay, the first requirement, using analytical review where appropriate. So examiner is saying use analytical review where appropriate. So is it like forcefully, or is it like just where it is appropriate? So use the analytical review not every time, but only where it is appropriate. So it might be appropriate in some areas, it might not be appropriate in certain areas. So, but it should not be applied forcefully. Comma, evaluate the matters which may cast doubt on Delhi company's ability to continue as a going concern. Evaluate the matters which may cast doubt on the going concern status of Delhi company. Which may cast doubt means material uncertainties, which may cast doubt. So is the company, is Delhi company a going concern? Yes. But do they have material uncertainties? Yes. So financial statement should not be prepared on a breakup basis, right? Because the company is only facing some problems with regards to the future. If the problems are disclosed in the notes to the financial statement, then you will add a paragraph known as MURGC. And if the problems are not disclosed in the notes to the financial statement, then you will issue an adverse opinion. So evaluate the matters which may cast doubt on the going concern status. How many marks we have? 10 marks. Now, what's the marking scheme? Try to understand the marking scheme for the first requirement. For the first requirement, A, the marking scheme is 2 marks per matter evaluated. 2 marks per matter evaluated. So, every matter you evaluate will give you 2 marks. But examiner says in the marking scheme there are up to 3 marks maximum for identifying relevant trend or ratio which form part of your evaluation, of matter above. So if you evaluate a matter, how many marks will you get? 2. But when you were evaluating a matter, you use a percentage or you use a ratio in your matter. So examiner is saying up to 3 marks for identifying relevant trend or ratio which form part of your evaluation. But if it is an isolated ratio, if it is an isolated trend, you will not be getting any marks. Now, I hope you remember the day, I think day 1 or day 2, where we discussed about an additional half a mark we get in a risk question when we find a percentage or we find a calculation. I hope you remember that in the case of the risk of material misstatement and in the case of the audit risk. So that's exactly the same. For example, you wrote a matter for 2 marks, but that matter has a ratio involved or a trend involved so automatically you will now score 2.5 marks because you will get an extra half a mark for involving a ratio or a trend as part of your 2 marks answer. So you will get extra half a mark for a relevant trend or a ratio. How many maximum marks you have for relevant trends and ratio? Up to 3. So how many ratios or trends you can identify in one question? If every ratio or trend is worth half a mark, how many of them can be found to a maximum of 3 marks? 6. But where appropriate, don't forcefully find 6. Where appropriate, find them. You might just need to find them in 1 or 2 places. Wherever you find them and you use them, will you get extra half a mark for that? So automatically will a 2 mark situation become 2.5 mark situation? Is everyone getting that perspective? Okay, now let's do once I solve the question, I will be giving you how we get 2, how we get 2.5, or how we get more than 2.5 once I start applying the situation. Okay, look at the B situation. The B situation says explain the audit evidence in respect of the cash flow forecast. So what evidence will you expect to find in the file for a cash flow forecast? The marking scheme for evidence is very simple. you will get 1 mark per evidence. And that's same for even the audit procedure. So we have 9 marks. So how many evidence we should find and write in the answer in respect of the cash flow forecast? 9 evidences. I hope you have seen my previous webinars where uh, I have given you guidance on how you write the evidence, something like copy of, notes of, results of. I hope you remember these terminologies I've used in my previous webinars, right? So you need to write 9 evidences in respect of only the cash flow forecast, only the cash flow forecast, not for anything else. Then in the last part, examiner says, look at the last part. You have established through discussion with Delhi company director that they do not wish to disclose the uncertainties in the notes to the financial statement. So directors do not wish to disclose the uncertainties in the notes to the financial statement. What is the implication for the audit report? Will you give a CAM? Will you give an emphasis of a meta paragraph? Will you give an MURGC? Will you give a adverse opinion? Will you give a qualified opinion? Let's see who gives the wrong answer. I'm finding the student with the wrong answer. How can that be possible? All of you are giving the right answers. That's wonderful. So that means you have understood the last 10 minutes of the webinar very effectively. So the directors are reluctant to give a disclosure for the uncertainties. So if they don't give a disclosure, will the auditor issue an adverse opinion? Do you understand this disclosure is very important? Right? Good. Required. Explain the possible reasons why the directors may wish to exclude these disclosures. What are possible reasons why directors may wish to exclude these disclosures? That's one requirement. And can you see the word and here? Can you all see the word and? So one requirement is to find the possible reasons why directors wish not to give this disclosure. And secondly is to evaluate the possible implication for the audit report. Have you already evaluated the possible implication for the audit report that you will give an adverse opinion? So in the last requirement, we have 6 marks and 1 mark per point you write. 1 mark per point you write. Whether that is a point for reasons why directors wish not to give reasons. So every reason you write why directors wish not to give a reason, disclosure, sorry, will give you 1 mark. And every possible and every point you write for the implication on the audit report will give you 1 mark. So how many marks, how many points you should have in a 6 marks answer? 6 points. Some points for reasons why directors may wish to exclude disclosure and some point for the implication for the audit report. Is everyone clear with the marking scheme, the breakup of the question? What is the question asking you? Okay, that's great. Now let's do the first part, which is I'm only doing the first and the last part, right? I'm not touching upon the evidence. You have to do evidence yourself. Okay, let's do the 10 marks part so I can illustrate the marking scheme. How can you get an extra half a mark for a trend or a ratio? And how can that formulate to a better answer? Okay, let's start the part A of this question. Part A. Now, something is interesting. If I take you to the practice platform, and on the practice platform, if I open up the December 18 paper, it's in the ACCA official resources. And in the official resources, the past exam library, no, in the practice exam, the practice exam 2. Can all of you see the practice exam 2? That is basically December 18, right? So practice exam 2 is basically December 18. So you click on the practice exam 2, you assign the practice exam 2, and the practice exam 2 comes on the left hand side of the screen, and you start the practice exam 2. Okay, now you see the practice exam 2, which is December 18 paper, in front of your screen. I'll click next. So I need to go to the section B. In the section B, I'll find the question 2. Now look at the question 2 in front of your screen and look at the response option given to you for this question on going concern? Look at the response option. Has the examiner given you a spreadsheet as a response option? Even though the question was asking for use analytical procedures where appropriate. Normally, the spreadsheet is given in the question number 1, which is a question on risk. And I did mention that in my day 1 of the webinar, and even in my June 2020 webinar day 1, that you will only use the spreadsheet in the question number 1 if the question asks for use the analytical procedures. But if the question isn't asking for use the analytical procedure in the question number 1, you will not use the spreadsheet. In the question number 1, spreadsheet is given, whether the question is asking for analytical procedure or is not. But look at this question number 2. Is the examiner giving you a spreadsheet here? No. So do we need to write everything on a word processor? That's the only response option. So how will we calculate the ratios and trends? Through the calculator. Either you use the calculator on the screen, or you have your own calculator in the exam center or in the remotely invigilated exams. So that's the only response option. Let's start the exercise now. That was the only thing I want to confirm to you, that examiner has not given us the second response option here, even though the examiner is asking for analytical procedure. Now, what will you do? You open up your word processor. I hope you can all see the word processor in front of your screen. And in the word processor, you write answer to question number 2, part A. And you copy the requirement part A from here. You copy the requirement, Control C, you go back to your word processor and you copy the requirement in your word processor. Using the analytical review, evaluate the matters. So what is the heading? The heading would become matters which may cast doubt on the going concern status of the company. So that becomes my heading. Now under this, I need to write the matters. Let's see, how would I write it? Now, I should close my requirements and I should open the draft financial statement, right? First. Now, the moment I open the draft financial statement, right in front of your screen. Okay, let's go one by one. Can any one of you find for me the current ratio? Can you see the current assets of the company are 9.5 million in the current year? And they are 6.9 million in the last year. Right? You cannot write anything in the draft financial statement. If you click to write something in this Excel file, it will say locked cells cannot be modified. So can you find me the current ratio? Current assets is 9.5 and the current liabilities are how much? The current liabilities are 6. The current liabilities are 6 and the current assets are 9.5. Can you see them? And in the last year, the current assets were 2.9. Sorry, current liabilities were 2.9 and the current assets were 6.9. Okay, 1.58 is the current ratio for the current year. And what about the last year? 2.34 is for the last year. Okay, have we found a ratio? Number 1, have we found that the current ratio has fallen from 2.34 to 1.58? Have we found this? If I use this result of the current ratio in converting to a matter which may cast doubt on the going concern status, how many marks will I get? The current ratio has fallen. I will get a 0.5 marks for this. But if I convert the current ratio has fallen to a matter which may cast doubt, for every matter, I will get 2 marks. So this situation will get to 2.5 marks. So is that a liquidity concern for a business? Is that a concern on their ability to pay, that the current ratio has drastically fallen down from the last year? Even though it's still good, but it has drastically fallen down. Now, that's one calculation which can be converted to a answer, right? No, you don't need to use the tables for ratio, Samia Khan, because this is not a question number one. In this question, you just need to bring the results of the ratios in your answer. I'll just show you how you answer, right? Currently, I'm doing my rough working, right? This is my rough working on the word processor, right? So on my word processor, I just wrote answer to question number 2. Now, whatever things I'm getting, I'm just writing them on my word processor, and then I formulate my proper 10 marks answer. Okay, you go back to the draft financial statement. Okay, in the draft financial statement, can you find for me, okay, can you look at the revenue of the current year and the last year? Can you look at the revenue for the current year and the last year? The current year revenue is 11.3, the last year revenue is 8.8, right? And can you look at the receivables? The receivables for the current year is 3.7. The last year receivables were 3. Can you find the receivable collection period? Can you find the receivable collection period for both years? The receivable collection period. The receivables are 3 in the last year and 3.7 in the current year. And the revenue is 8.8 and 11.3. Okay, current year is 120. Okay, who will give me the right answer? Tarek, you're saying 97 days? 97 days is when? Okay, let's go for the current year quickly. The current year, 3.7 million of the receivables and 11.3 million of the sales. Now divide it quickly. 3.7 million of receivable and 11.3 million of sales. What's the answer? Okay, and last year we have a sale of 8.8 million, and last year we have receivables of 3. So has it fallen? The current the receivable collection period has fallen. Okay, find for inventory. Find the inventory holding period. Can you see the inventory 4 and 5.8? Can you just note this value quickly? For inventory, the current year number for inventory is 5.8. The prior year number for inventory is 4. The inventory current year number is 5.8. Have you noted it down? And the last year number is 4. And let's look at the cost of sales. The cost of sales for the current year is 4.4. The last year cost of sale is 2.9. The current year cost of sales is 4.4. The last year cost of sale is 2.9. Can anyone find quickly the inventory holding period? Okay, what about the prior year? Okay, can one student give me both the answers in one chat window by writing CY and PY? Okay, fine, thank you. Okay, can you see the second, because the inventory holding period and the receivable collection period, as per your answers, they are showing a favorable trend, so we're not commenting on them. Now look at the second situation. Can you see that in the last year, the company had a cash balance of 1? Can you all see that? The company had a cash balance of 1 in the last year, and the company has a nil cash balance this year. Is that another liquidity problem? That they had a cash balance of 1 in the last year, they had a nil cash balance this year, and if you go down, see the bank overdraft. Last year, because they had a cash balance, they didn't had an overdraft. This year, they had an overdraft of 1. So should I write this under my point over here? The current ratio has fallen from 2.34 to 1.58. And number 2 point, the positive cash balance, in last year has now become an overdraft of 1.8 million. Does both these points fall under the liquidity problems? Right? So if I write my point, if I put my heading over here, liquidity issues as my first meta, and I write my answer under the liquidity issue. Delhi company is facing some liquidity issues as evident from the fall in the current ratio, Just give me 1 minute. Delhi company is facing some liquidity issues as evident from the fall in the current ratio from 2.34 in last year to 1.54 in the current year, and the positive cash balance has now been translated into an overdraft. Delhi company is facing some liquidity issues. Current ratio has fallen in the current year, and the positive cash balance has now been translated into an overdraft. Means that the company is facing issues in meeting its short-term obligations. The company is facing issues in meeting its short-term obligations, and this liquidity issue can worsen. These liquidity issues can worsen if the company has to immediately pay. If the company has to immediately pay to someone, that someone could be in the case study, right? I'll just connect that someone to the case study. There is a someone in the case study, which means that the company is facing issues in meeting its short-term obligation, and this liquidity issue can worsen if the company has to immediately pay to someone. Liquidity, or a fall in liquidity, is an indicator which cast doubt on the going concern status of Delhi. We are not saying the company is closing down, but it's just causing a doubt on its going concern status. Right? So now tell me, how many marks am I getting for this paragraph? 2.5. So I used one result very favorably, so I get 2.5 marks here. 2 marks for a meta and half a mark for involving the 2.34 and 1.54. I will not get any marks for a positive and a negative cash balance because that was just a statement in the case. I just copied that. But the efforts I did was behind 2.34 and 1.54. Okay, let's go to another point. Let's go to the notes to the account. Can you look at the notes to the account on your screen now? And there are so many notes to the account which can translate into a going concern problem. Can you look at this note number 4 here? A major new competitor has moved into the Delhi company market in May 20X5. a major new competitor has moved into the Delhi company market in May 20x5, right? That's a very important indicator. A major new competitor has moved into Delhi company market in May 20x5. Okay, let's go to the Word file. Let's copy this. A major new competitor has moved into Delhi market in 20x5. I put this as a heading and a right under this. May 20x5. Okay, let me see the financial statements for 1 minute. If I look at the financial statements, May 20x5, that's after 2 months, 2 months after the year end, right? The year end is 31st of March. So when has the major competitor moved in? May 20x5. So that's 2 months after the balance sheet date, and we're looking into the foreseeable future. Look at the revenue. Has the revenue increased from the last year to this year? How much? How much revenue has increased from the last year to this year? Percentage? 28%. Okay. And has the company become a loss making? Last year they had a profit of 2.6. Now they have a loss of 3.4. Despite the fact that the revenue of the company has risen by 28%. Now see how you write this point. A major new competitor has moved in May 20x5. Delhi company can face severe competition from the new competitor in future as the competitor is a major one. The competitor is a major one. Though at the year end, the sales of the company has increased by 28% over the last year, sustaining the growth in sales. Sustaining the growth in sales seems difficult ahead. Because of the new competitor. Delhi company can face severe competition from the new competitor in future as the competitor is major. Though at the year end, the sales of the company has increased by 28% of the last year, sustaining the growth in sales seems difficult ahead. Also, if the sales are not sustained, the company is already into losses, and the losses will accumulate, further in future. I'm just making the spelling corrections for the sake of the class, but you're not worried about spelling corrections in a computer based exam, not the grammar, but I'm just making it just because I need to put this file to you. So Delhi company can face severe competition from the competitor, though the sales have currently risen up, but sustaining the sales seems difficult. Also, if the sales are not sustained, the company is already into losses, and the losses can accumulate further in the future. How many marks will I get? 2 or 2.5? Have I used any percentage here? Have I brought a percentage? I did brought a percentage of 28%, right? So I will get 2.5 marks, not 2. Right? So this is how you write a matter which may cast doubt. You pick up a situation from the paper. The situation can come from the numbers. We picked up the situation number 1, the liquidity issues, from the numbers. We picked up a situation 2 from the narrative. So it's up to you how many situations you pick up from narratives and how many situations you pick up from the number. But if you use a number and you find a ratio or you find a trend, for that number you will get an extra half a mark, and then you write the matter for 2 marks. I hope you're all clear on that with the marking scheme application, right? So you have notes, read these notes, see how you can convert these notes into matters which may cast doubt. Can you see the note number 5 here? The note number 5 says the going concern working paper includes a cash flow forecast. So should we ignore the note number 5 because the note number 5 is for writing evidence for 9 marks? Examiner was asking us to write evidence on a cash flow forecast. So see how big the note number 5 is? Because the examiner wants you to read the note number 5 and extract 9 evidences around the cash flow forecast. Is that clear? Okay, look at the note number 3, find the last one. Look at the note number 3. The provision of 3.5 million in the year's statement of financial position relates to a legal action from 5 of Delhi's company's largest customer. The action relates to the claim that the company has sold cars which did not comply with domestic regulation. 5 major customers of Delhi has filed a claim against you of a $3.5 million. Have we already recognized a provision for that? A provision of 3.5 million in the year's statement of financial position relates to the legal actions. But what is the doubt? What is the doubt here? Is there a chance we might lose the major customers in future because a new competitor has already come in? Is there a chance that your major customers will switch to the competitor for buying cars in future? And can that become a major blow to your already accumulated losses? So is there a chance that you might lose customers? Legal action from 5 of Delhi's largest customer. Control C, and you bring this point to your word processor. Control V, and you write under this. This is the last one I'm writing, right? The legal action from 5 of the Delhi's largest customer. The legal action will bring a bad repute for the company, and more importantly, because of the new competitor entered into the market, it gives the 5 major customers a chance to switch from Delhi, which, if happen, could put a serious dent on company's sustainability of revenue and and the bad image due to the legal case and loss of customers can result in company losing its market share badly to the new competitor. So is that a doubt on the going concern status? The legal action will bring a bad repute for the company, and more importantly, because of the new competitor has entered the market, it gives the 5 major customer a chance to switch from the Delhi company to the new competitor, which, if happen, could put a serious dent on the company's sustainability of revenue, and the bad image due to the legal case and the loss of customers can result in the company losing the market share badly to the competitor. Are you clear? This will give you 2 marks. I didn't use any numbers here. So already drafted a 6.5 marks answer for you. I hope you are all clear on it. Let me copy this answer from the word processor, Control C, and take it on my Word file, because you will be getting the Word file at the end of the session. So you will have the answer written in the Word file. Just give me 1 minute so I can just organize the Word file for you. So once you get it, you can just take a print out of it. Are you all clear with it? So please continue, write up the answer. Okay, now the last part of this question before we wrap up the discussion on going concern. Uh, Explain the possible reasons why the director may wish to exclude the disclosures and evaluate the possible reasons. Possible implication for the audit report. A 6 marks answer. Just give me 1 minute. Sorry. Just need to copy this. Okay. Yes, definitely the break will come. You are just listening, right? I am speaking. The break will definitely come in next 5 minutes once I complete the C part, because after the break, we need to start with data analytics. Okay. One of the possible reasons why directors wish not to give a note is because of their self-interest, because of their bonuses. They want the bonuses. They have the self-interest in the salary, in the remuneration. So they don't want to lose the bonuses. So that could be one of the reasons they wish to exclude these disclosures from the shareholder. Secondly, uh, they want uh, they don't want the company image to be affected, because they believe if the company image will be affected, their job can be at risk. So they don't want the company image to be affected, and that is the reason they want to conceal bad information from public, from public, and they don't want to lose future loan taking. They want loan from the bank, right? They want loan from the bank. They're already negotiating a loan from the bank. So they don't want anything negative against the company to be disclosed, because that will really hurt their future loan taking from the bank. Yes, Hamad, the reasons are journal here, right? Because you're journally speaking, what are possible reasons directors may wish to exclude these disclosures? You will not find any reasons from the case study. You're speaking journally that why directors in journal wish to exclude these disclosures, right? So they don't want to lose the future loan takings. They don't want the company image to get bad, because that will affect their job security, and because of their self-interest in bonuses. So every possible reason you write and you explain it properly, you get 1 mark. If you can connect a reason with a case study, that's good. But if you believe in the case there are no good reasons, then you can write your own reasons as well. But you should know the reasons why directors may wish to exclude disclosures. Right? Exactly, Buzzla. That's very right. In future, they want to attract new customers, and they don't want to put a bad image of the company, because that will not help them attracting the new customer. Right? Okay, now let's look at the implication. What is the implication on the audit report if the directors refuse to give a disclosure? Implication on the auditor report. Try to understand how will you develop the answer. You need to formulate a paragraph yourself. I'm just giving you the steps to formulate the answer. When the examiner says evaluate the possible implication for the audit report, firstly, you will tell examiner that the directors are reluctant to give a note for the material uncertainties relating to going concern of Delhi company. So you start first with the problem, right? You start first with the problem. You tell examiner that the creditors are reluctant to give a note for the material uncertainty relating to going concern of the Delhi company. Then you tell that this disclosure about MU is very important for the shareholders, is very important for the shareholders to know what exactly is the situation, to know what exactly is the situation. So this disclosure is very important for the shareholders to exactly know what is the situation, so that they can take sound decisions about future. They can take sound decisions about their investment. So you're saying directors are reluctant. The disclosure is important. So you're building up the situation. Now, because the directors are reluctant and the disclosure is important, you tell examiner that the auditor will issue um, a adverse opinion, and you tell examiner this is the judgment of the auditor. This is the judgment of the auditor on the basis of the disclosure being important and fundamental to the financial statements, So you say the auditor will issue an adverse opinion because this disclosure is very important. The judgment of the auditor on the basis of the disclosure being important and fundamental to the financial statements. So that's the reason for giving a adverse opinion. Now, whenever the disclosure of a going concern is not given, we issue an adverse opinion because you need to understand that the disclosure of going concern is very, very important. You cannot just treat it as like a qualified opinion. Even if you see the examiner answer, examiner has dealt the disclosure not given as adverse because it's a very important matter. You need to understand going concern is the basis of preparing the financial statement. So anything which affects the going concern, which affects the disclosure of going concern, has to be dealt as a very, very serious matter. Now, the auditor will issue an adverse opinion, and this will lead to a modified audit report whereby the auditor will explain the basis of adverse opinion to the shareholders after the adverse opinion paragraph. See, the question was asking for implication for the audit report. Can you all see this? What if the question was asking for implication on the audit opinion? Implication on audit opinion. Try to understand the implication on audit opinion is a narrow terminology. The implication on the auditor report is a broad terminology. If the question asks you implication on the audit opinion, I could have stopped at the bullet number 3 because I've already given the implication on the opinion in the bullet number 3, adverse opinion. But why I wrote the bullet number 4 that this will lead to a modified audit report, and why I tell examiner that there will be a basis of an adverse opinion in the audit report, which will be after the opinion paragraph, because I was writing about the auditor report, that what will happen to the auditor report. So the extra bullet you wrote, the 4th bullet, was because the question was on implication of the audit report. So report is a broad term, opinion is a narrow word. Opinion is part of report, right? Is everyone clear between the difference of opinion and report? Though I've covered it multiple times in my previous webinar as well. So please formulate a proper answer. Every point you write will give you 1 mark. You need to gain 6 marks. There are 2 parts of the C requirement, but you need to write the answer in a paragraph form. Is that clear to all of you? Okay, good. So I hope you got some knowledge from this exercise of going concern. You got to know the marking schemes of the going concern, when to fetch 2 marks and when to fetch an extra half mark up to a maximum of 3. I hope you got some clarity at the beginning of the session today about the different types of situations in going concern and their impact on the audit report, right? And I hope you got to know the structure of the question which comes on going concern, and more importantly, the importance of reading the article on going concern. So going concern is not a difficult syllabus area. You need to read the article. You need to be very clear about the reporting implications of going concern. You need to know how to write an evidence in the working paper file. You need to know how you write an implication for the audit report. And from the case study, you should know how to write matters which may cast doubt, right? So I hope you got some understanding, some clarity around the going concern area, and some of my criticism and some of my statements in the last 90 minutes must have given you the right direction of not to do mess in a reporting question, because there are so many things in a reporting question which you can mess up, because students are very bad on judging when to use scam, they're very bad on judging when to use murgc, they're very bad in judging the emphasis of a matter paragraph, and generally they mess up the three. Is that clear to all of you? Okay, we are now taking a break, and after the break, it's a 15 minutes break. So after a 15 minutes break, we'll first start with a quick analysis of audit reporting. What is a modified report and what is an unmodified report? I'll just spend 10 minutes on that, not more than that. Don't expect I'll go deep inside it, because I've already covered that in my previous webinar, but just 10 minutes, because I want to spend the remaining 1 hour on the exercise of data analytics and what you can expect in your exam paper in line with the changes brought by the examining team in data analytics. So I will be telling you about the changes which I mentioned on the day one, and I will be telling you in line with those changes, what can you expect in the September 2021 exams and thereafter, right? Okay, so off to a break, everyone. And right after the break, we'll resume back with data analytics. Let me write in the chat box that we have a break till 10 p.m. I hope you all got that. And Bazla Bek, uh, no, one time you write full, like one time you write International Financial Reporting Standard, or one time you write financial statement, and in the bracket you write FS. Now in the whole paper, you can use FS. One time you write those charged with governance in full, and then in the bracket you write TCWG, and then in the whole paper you can use those charged TCWG. One time you write finance director and you put in the bracket FD, and anytime next you need to write finance director, you will just write FD. Is that clear, Bazla? So one time write the full form and then abbreviate it, and then in the whole paper you can use the abbreviation. Okay, thank you. So off to a break, and we'll resume back at 10:10, and I'll be spending quick 10 minutes on reporting, and then we'll take on the data analytics. Off to a break, everyone. And please do drop the feedback of the session so far, day 4, part 1, during the break. Okay, welcome back, everyone. I hope you can all hear me. If you can just confirm that my voice is getting through to all of you. We are just like a minute away from the start of the session. So I have just joined a minute earlier just to confirm that everything is in the orderly manner. So we resume at the actual time, which is 10:10. Okay, thank you for confirming that. Just few seconds, and we are resuming first with a quick summary of modified and unmodified report, and then starting with the data analytics analysis. What exactly you expect in your upcoming exams? Okay, let's resume back. Welcome back, everyone. We are into the day 4 of the AAA webinar for September 21 exams. I'm Kashif Kamran. We were on break, and prior to the break, we were discussing the going concern and what sort of a question comes in the AAA paper in context of this topic, and what is the importance of reading the examiner article on going concern. Now, please ensure you read every part of this article, which is very, very important. There are so many paragraphs in this article, particularly if you look at this paragraph on your screen, designing, performing, and evaluating audit procedure. This is very, very important. Please ensure you read through this paragraph, because in this paragraph, the examiner tells you what sort of procedures you can make on going concern, or what sort of evidence you can expect to find in the working paper file. So this is a very, very important part of the article. And then obviously I've covered one area with you, which was forming an audit opinion. But please ensure you read this article from A to Z and every aspect of it, so that you know everything your examiner expects from you in terms of a question on going concern. So just spend one day on this article, a couple of hours, and you will be great on going concern, right? Okay, now let's do one final thing. There were lots of questions, and that resulted in my conclusion that we should discuss one thing quickly here: modified and unmodified report. What exactly that is? Just 10 minutes, right? Not more than that. I've covered this in my previous webinar, but just a quick scan. As a student, you should know that when you look at an unmodified report, whether of a listed company or of a non-listed company, the unmodified report contains certain opinions and paragraphs which are by default. Unmodified means something which is known as a standard report. Now, when you look at a standard report consists of an unqualified opinion. A standard report consists of key audit matters, because key audit matters is a very standard part of the report, a very static part of the report. Even though if you don't have any CAM in an audit, you will put the heading CAM in the audit report and you will say there is no CAM to report. But CAM is not a paragraph which can be deleted from the audit report. It is a stationed paragraph. It is a static paragraph. Then the paragraph, other information paragraph. The other information paragraph, which is about the auditor responsibility about other information, and the management responsibility about other information, or whether the auditor has identified any material inconsistencies or not. They, that is a static paragraph. So other information paragraph cannot be deleted from the audit report. The key audit meta paragraph cannot be deleted from the audit report. And the unqualified opinion is the standard opinion. Now, if you issue an unqualified opinion, the report will remain unmodified. If you put a CAM in the audit report, the report will remain unmodified. If you put another information paragraph, the report will remain unmodified. But if the auditor add, if the auditor change the opinion, or add an additional paragraph to the standard report, above, the report will become modified. The report will become modified. Modified means to change, right? Modified means to change. Change can be positive, change can be negative. Now, if the auditor change the opinion, suppose you change the opinion, right? You change the opinion and you issue a qualified opinion, or you change the opinion and you issue an adverse opinion, or you change an opinion or you issue a disclaimer of opinion. Now, the moment you change the opinion from the unqualified opinion, automatically, because the opinion has been changed, the change of opinion will result into a modified report, If you add a paragraph which is not part of the standard report, now how many paragraphs are not there in the standard report? That means if you add an emphasis of a meta paragraph, the report will become modified because of the inclusion of the emphasis of a meta paragraph. If you add an MURGC paragraph, because of the inclusion of the MURGC paragraph, the report will become modified. Or if you add another meta paragraph, OMP, because of the inclusion of OMP, the report will become modified. Now, modified doesn't mean something negative. Modified also means something favorable. Modified means to change. Right? Modified is equal to change from standard. And change can be positive. Student don't understand this, right? Student believes change is only negative. Change can be positive or negative. So if you issue a qualified opinion, that is a negative change. You don't write this terminology in exam paper, right? Negative change and positive change. This is just for a sake of a class, right? This is just for a sake of webinar. Don't write this in the exam paper, please. If you issue an adverse opinion, that's something negative. If we issue a disclaimer, that's something negative. But if you add an emphasis of a meta paragraph, that is something favorable, because you are drawing the attention of the shareholder to something very important. If you add an MURGC paragraph, that is something favorable, because the disclosure of the material uncertainty has been made by the management. That is favorable. Because the disclosure has been made by the management, you want to draw the attention. Favorable. Other meta paragraph is also favorable. When there is a change of auditor, you highlight the change of auditor through other meta paragraph. You just tell shareholder that last year audit was done by another auditor and this year audit is done by me. Other meta paragraph. So when you change the opinion or you add an additional paragraph, the report will become modified. Is everyone clear with that? So please be sure when to write in the exam paper results in an unmodified report, when to write in the exam paper results in a modified report. So please be sure of this terminology. So modified report and unmodified report. So what makes the report modified? I hope you're clear on that. And what makes the report unmodified? I hope you are clear on that. So if you add a CAM in the exam paper, will that make the report modified or unmodified? Right? And if you add an MURGC paragraph, will that make the report modified, unmodified? That's great. So I hope this summary and my previous webinars will help you. Please do watch my previous webinars for more clarity on unmodified reports and modified. But that's pretty simple. I hope if you just put this summary in your brain, you know everything, and you will never do the mistake, right? So that's one thing. So the 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 problem is that students do mess in a question on reporting. I just want to show you one quick criticism, and then exiting from this. If I show you the December 18 examiner report on the screen, I hope you can see the December 18 examiner report on your screen now. We were attempting a question number 2, right? We were attempting a question 2 from the December 18 examiner report. Question 2, right? The 25 marks question covering the going concern assessment for a non-listed client, right? We were doing this before the break. Agree? Let's look at the criticism. Requirement A, the criticism for requirement A, please do read it on your own. I want to show you the criticism for requirement number C, which is reporting. Now see, what is the examiner telling you about the requirement C? Finally, the part C for 6 marks required candidates to explain why the directors may wish to exclude disclosures relating to going concern in the notes to the financial statement and the possible implication on the audit report. Candidates were generally able to identify the reasons for non-disclosure, but performed very poorly. Look at this word, performed very poorly on the audit report implication. Many candidates wrongly stated that the director omitting a required disclosure would not constitute a material misstatement. How interesting is that? Many candidates wrongly stated that directors omitting a disclosure, that's quite funny, right? Directors omitting a disclosure would not constitute a material misstatement. See, this is unbelievable currently, but this becomes believable in exam hall or exam context. Some things which are unbelievable in the webinar day 4 really becomes believable on the actual day of exam because something happens to the student community. So directors omitting a disclosure would not constitute a material misstatement. Many therefore went on to conclude that the opinion would be unmodified. See, directors were not giving a disclosures and the student went to conclude that the opinion would be unmodified, though we conclude that the opinion will be adverse. But that the going concern disclosure would be made in the audit report instead of in the notes to the financial statement. See how funny that is. The student telling examiner that the going concern disclosure would be made in the audit report, not in the financial statement. Do you make a disclosure of the going concern in the notes to the financial statement or in the audit report? In the notes. Full stop. This is not the case. This is not the case, and candidates should ensure they are familiar with reporting requirements. Candidates should be familiar with reporting requirements. You still have 1 month to be familiar with reporting requirements in ISA 570 going concern. I hope my session today did made you familiar with the reporting requirements in relation to ISA 570. Some candidates suggested including key audit matters. Interesting. Some candidates suggested including a key audit matter section for a going concern issue. For a going concern issue, can you include a CAM? And more importantly, was it a listed company or was it a non-listed company? No, it was a non-listed company, Molly. It was a non-listed company. So, can you include a CAM in a non-listed company? Not at all. And can you include a CAM for a going concern problem? Never. So, some candidates suggested including a CAM or an emphasis of a meta paragraph or both even. How interesting. Look at these statements in front of you. They look like funny statements to me as a tutor. That the students recommended let's include a CAM, some student recommended let's include an emphasis, and some student thought let's include both in a hope that some of them will be correct and I'll get marks. I think in a reporting question you write everything. You write emphasis, you write CAM, you write MURGC, you write qualified opinion, adverse opinion, in a hope that I will get marks for whatever is correct and I will not get marks for whatever is incorrect. I hope you're getting my perspective here. So read examiner criticism of every question you do at home. Read examiner criticism of every question you do at home, because examiner criticism is the only way you come on the right track. If you ignore examiner criticism and you went to the exam hall on the 6th of September, you can do the same mistakes. Is everyone clear? So have you found this criticism of examiner for 6 marks interesting? Now tell me, do really students make mess of a reporting question? They try to bring everything they know about reporting in a 6 marks answer. Okay, now let's end the story and let's change the topic. Now let's start with data analytics and let's look at the recent changes which has been brought into data analytics. Now, since we started this webinar, day one, on the day one of the webinar, I guided you about the changes which has come in the syllabus area D1, D2, and G2. I hope you remember that. Now, we discussed the syllabus changes D1 when we were discussing ROM, that you need to identify significant ROM or significant audit risk, or you might need to prioritize the ROM or prioritize the audit risk if asked for in the exam paper. But now we're looking at the D2 change, which pertains with data analytics. Now, data analytics is an article which is already published by the examiner. You can see the hyperlink here. And data analytics is an article which has also been examined in the past paper as well, because I think this is now a 1-year-old article. If I can show you the article on your screen, data analytics, you can download this article. It's already provided to you in the handout section of the webinar, but you have to read this article A to Z. I have already covered the aspects of the article in my YouTube session, so I will not be touching upon the aspects of the article. So if you want to read the article and you want the tutor to guide you about the reading of the article, that has already been covered in my YouTube session. So I will not be wasting time on reading the article, right? Now is the updates. What is your examiner expecting on it? So I have a YouTube session on it. I'll just give you the link of that if you want to play this. Let me show you the YouTube channel link here. Let me put it over here. So once you get this file, you can watch it on the YouTube. Okay, now let's look at the syllabus changes D2 from day one. I just copied them from day one, the day one presentation. I hope you have the day one presentation, right? In the day one presentation, the changes were there. I just copied them on my Word file. Let's see how and in what context we expect something coming in September 21 exams. Now be very, very careful for the next 30 minutes. The learning outcome in relation to the automated tools and techniques. Automated tools and techniques is a syllabus area, D1, right? D2, sorry. The learning outcomes in relation to the automated tools and techniques, particularly data analytics, have been extended this year. So examiner is saying particularly data analytics have been extended this year. Now the change in the syllabus is for September 21 up to the June 2022 exams. So the changes have been brought for September 21 up to the June 2022 exams. So examiner might put the change right in the first exam setting, or examiner might put the change in the December exam setting or in the March exam setting, but somewhere the change will come. If the examiner skip you in September, then he will get hold of the December exam students. Examiner is saying the learning outcomes in relation to the automated tools and techniques, particularly data analytics, have been extended this year. So examiner is saying the data analytics as a topic or as a learning outcome has been extended this year. How? In what context has it been extended? Now you might ask me a question. What extended? What extension? What extension? and how this extension impacts you for September exams. Right? So what extension and how this extension impact you for the September exams? In the next paragraph, the examiner tells you about the extension, Arsalan. And in the next paragraph, examiner tells you how you should be sure of this extension in your September 21 exams. So look at the next paragraph. Examiner says, the introduction of the learning outcome D2, the introduction of the learning outcome D2 you requires the ability to evaluate and interpret the results generated from these techniques, both at the planning stage and at the evidence stage. Examiner is saying, as a student going for the September exams, you should have the ability to evaluate, and you should have an ability to interpret the results generated from these techniques. Which techniques? These techniques is what? From data analytics. These techniques means data analytics, because that has been extended this year. So that is very sure now. Examiner is saying that as a student, you should have the ability. I will just give you the ability in the next 1 hour we have, or less than 1 hour we have. The ability to evaluate and the ability to interpret the results generated from these techniques. So is it possible that the examiner may give you the results in your paper of data analytics, and you need to evaluate the results of data analytics, or you need to interpret the results of data analytics? Is that what means from the bullet number 2? So ability to evaluate and ability to interpret results from these techniques, both at the planning stage, which is the question number 1, and both at the stage of evidence, which is the question number 3. Evidence, completion, reporting. So examiner is saying that as a student, you should have an ability to evaluate and interpret the results generated from these techniques. So is the examiner expecting you to generate the results, or is the examiner expecting you to interpret and evaluate the results generated? Tell me. So is the examiner expecting you to generate the results, or is the examiner expecting you to evaluate and interpret the results already generated? Right? So what is the examiner expecting? Examiner is expecting that the student should be capable of evaluating the results generated through data analytics and given in exam paper, right? That's what your examiner expects from you. So obviously you cannot generate the results in the exam paper, because you are not an expert in data analytics, but the results will be given to you, and examiner expects you just analyze those results. How would that be? Look at the last bullet. Examiner is saying you may be presented with results of these techniques. See, examiner is saying you may be presented. Examiner is not saying definitely. Examiner is saying you may be. So maybe means you might get it in September exams, you might not get it, but you may be presented with the results of these techniques in a variety of formats. So will you get the results in a variety of formats? Is that important? You will get results of data analytics in a variety of formats and asked to consider results. And you will be asked to consider results specifically, or to utilize these results as part of the planning work. Is the examiner saying as part of the question number 3, or is the examiner now specifically saying as part of the question number 1 in the bullet number 3? So you may be presented with the result of these techniques, right, in a variety of formats. So you might be presented with the result of these techniques in a variety of formats and asked to consider the results specifically. And so you might be asked to consider the results as a student specifically, or to utilize the results So either consider the results or utilize the results as part of planning work. So that means as part of what? As part of assessing the audit risk, or as part of assessing the risk of material misstatement. Now, understand very carefully something. So, in the question number 1, where we have to assess the audit risk, or where we have to assess the risk of material misstatement, examiner is saying you may be presented with the results of these techniques, and when the results is given to you in the question number 1 in a variety of formats, you may be asked to consider the results specifically or to utilize the results. So you may be asked to consider the results number 1, or you may be asked to utilize the results as part of your planning question. Right? Is everyone clear with the discussion? Now let's look at the last thing. Variety of formats. Examiner is saying variety of formats. The results could be presented to you. The results could be presented to you. I am not the examiner, but at least I am a tutor for AAA. And when I see this statement of examiner, variety of formats, the results could be presented to you, and you need to evaluate the results as part of risk assessment. This is what I am understanding as a tutor. Question number 1. Now, the only suspense here is the variety of forms in which the results could be presented. Now, just tell me as a student, if you look at the past papers from September 18 to June 21, and you look at the question number 1 of each of these exam settings from September 18 to June 21, right? Do it at home. Do it at home. Open the September 18 question number 1, then open the December 18 question number 1, then open the March, June question number 1, and go up to the time you reach the June 21 question number 1. You will see that in each of question 1, examiner gives you the extracts of the financial statements. Am I right? Because in the question number 1, when you are assessing the risk, you cannot assess the risk without carefully evaluating the financial results. So examiner gives you the extracts of the financial statement every time in the question number 1. Sometimes the examiner gives you the full balance sheet. Sometimes the examiner gives you a very minor looking balance sheet. So in question number 1, examiner gives you the extracts of the financial statement and what the examiner expects from you. And then the examiner expects that you carefully evaluate the results. You carefully evaluate the financial statements given to you and identify risk. Am I right? Sometime even the examiner asks you utilize the analytical procedures. Am I right? Utilize the analytical procedures. Sometimes the examiner even asks you utilize the analytical procedures. Just before the break, we were doing the December 18 paper. Did we had the balance sheet and income statement in the December 18 paper? And was the examiner expecting from us to identify the trends from the data, identify the ratio from the data, and where possible, convert them to a method which may cast doubt? So finding the balance sheets and income statements in the past paper, whether in a full form or a part form, is nothing unusual. Even examiner asking you utilize the analytical procedure in the past paper is nothing unusual. But now the examiner is saying, I will give you the results in a variety of formats using the data analytics. So that means the results presented to you in September 21 exams onwards might look different to the way results are presented up to June 21 exams. Am I right? So results presented to you in the September 21 exams onwards might look different to the way the results are presented up to the June 21 exams. Is everyone clear with that? But no, I'm talking about history, Molly, right? Results presented to you in September 21 exams might be look different to the way the results are presented up to the June 21 exams so far. So the way they have been presented up to June and the way you look at them in September 21 will be different, right? Let's look at a glimpse of it. When you use data analytics, right? When the auditor uses data analytics as part of risk assessment the results of financial statements are thoroughly when the auditor used data analytics as part of risk assessment, the financial statements are thoroughly evaluated and then a conclusion of the key changes in financial statement data or key changes in ratio or key trends in financial statement data are identified in a form of a dashboard. Now, when the auditor actually used the data analytics as part of the risk assessment, like the big four firms, PwC, E&Y, KPMG, so when they use the data analytics as part of risk assessment and they apply the data analytics on the financial statements at the planning stage of the audit, what happens that the data analytics, when you put the data analytic techniques on the financial statements of the company, the data analytics converts the financial statement into a dashboard, and that dashboard shows you the key changes in the financial statement data over the last year, the key changes in the ratio over the last year, and the key trends in the financial data. So the data analytics converts the financial statement of a client into a dashboard, and the dashboard shows you a summary of how the data has changed. Right? Let me give you a picture of that. Look at this. Can you look at this picture in front of your screen? This is a dashboard. This dashboard is telling us that the gross profit margin. Can you see on the right hand side of the screen that the data analytics has converted the financial statement of the client into a gross profit margin graph? And can you see the data analytics is showing you how the gross profit margin has moved in 2018 and 2017? Can you see that? So if you get something like a dashboard in exam paper like this, where the results are given to you, can you identify, looking at the results in the dashboard, can you evaluate and interpret the results given to you in a variety of formats? Can you evaluate from the results that the gross profit margin has increased by 70.2% over the last year? Last year it increased by 60%. This year it has increased by 70.2%. So can you identify the risk that the sales could be overstated or the cost of goods sold can be understated? In the ICAEW exams, we know the papers of ICAEW are not freely available like the ACCA papers. But in the ICAEW exam, when I speak to my students giving the ICAEW papers, they tell me that since last 1 year, in the advanced audit and assurance paper of the ICAEW exam, the examining team is already giving the data analytics dashboard to student to assess the audit risk. Now, I think that is something which ACCA would start doing now. So ACCA can give you some results of the financial statement in a very different format. But I think this graphical image given to you in ACCA exam, something like this, for example, can you identify risk from these pictures? Can you identify what is increasing and decreasing, everyone? Right? So this is just one glimpse. Look at the second picture. Look at the second picture. I downloaded a couple of pictures just to show you the variety of ways. Uh, Look at this. See, look at this picture. They are showing you that the gross profit margin of the company is 79%. The operating profit margin ratio is 68%, 30%, and 12%. So the results are shown in a more visual form. So that is the best thing the data analytics do. The data analytics study the financial statements of the company, and then the results are presented in a dashboard, which is more visual, which is more graphical. So do you believe this dashboard analysis really helps the auditor plan a better audit? Because this dashboard form of results really helps the auditor identify where things are increasing and decreasing. Do you believe visual results are better? Graphical results are better for the auditor to identify the risky areas in the financial statement? Right? And even for a student, it makes it easier, right? Thank you for agreeing with me, Hamza. So if results are presented to you in this way, where you know what is the gross profit margin, where you know what is the net profit margin, what you need to do, you just need to evaluate the results and you just need to interpret the results and find the risk, right? So when the auditor used data analytics as part of risk assessment, the financial statements are thoroughly evaluated and then a conclusion of key changes in data, key changes in ratio, or key trends in the financial statement are identified in the form of dashboard. Is everyone clear with this? Do everyone know what is a dashboard now and how things are presented in a dashboard? And in the dashboard, results are presented visually or graphically. So can the examiner give you visual and graphical results? Is that the variety of formats examiner can expect, examiner can have in the mindset? Variety of formats. Now, I believe something on that track was done in the June 21 paper. Let me show you something. Uh, Look at in front of your screen the September-December 20 paper. Can all of you see the September-December 20 paper in front of your screen? Okay. Question number 1. And in the question number 1, exhibit number 1. Exhibit number 2, background information. Exhibit number 3. See the exhibit number 3. In the exhibit number 3 of the December 20 paper, right? Can you see the examiner has presented us the selected financial information in the December 20 paper? How much is the revenue? How much is the profit? How much is the how much is the total assets? We have been given the numbers, but have we been given how much revenue has increased? That means we have to find it out. Now, you need to do an extra effort, right? How much revenue has increased? You need to find it out. What is the operating profit margin? You have to find it out. So when the results are presented through data analytics, they are already converted to percentages. You just need to look at the percentage and identify the risk. Now, if the result is presented this way, look at the December 20 results. What should be the first step here? Will you take out the calculator first? Will you find the increase in profit? Sorry, increase in revenue? Will you take out the calculator and find the operating profit margin? Do you need to do an extra step here? Do you need to do an extra step here, everyone? Do you need to do an extra step here to find the results? And then will you interpret the results? Then will you evaluate the results as a risk? Right? Look at the March June 21 exams, the one we were solving in the last 3 days. Can you all see the March 21 exams on your screen in the PDF format? Right? Let's go to the question number 1 of the March June 21 exams. Okay, exhibit 1, exhibit 2, exhibit 3, exhibit 4. Okay, can you see the exhibit 4 of the March June 21 exams on your screen? The latest one. Examiner know from September 21 I need to change the format. Examiner knows from September 21 I need to change the format. See what the examiner did in the June 21 exams. See how the results are presented in the June 21 exams and how different they are from the December 20 exams. Is the examiner giving you the current year and the last year revenue and also the percentage changes? Also the percentage changes? Is that a big change? Is the examiner giving you the percentage change in revenue, the percentage change in profit, and the percentage change in profit before tax? So has the examiner eliminated one step? So examiner is saying, don't use calculator. Just tell me what is the risk in 5.5%? What is the risk in 4.8%? What is the risk in 30%? Just tell me that. So if examiner presents you the results through data analytics starting from September 21 exams, not sure, it could be December 21 exams. What I believe is that the results presented through data analytics will already be converted to ratios and will already be converted to percentages. You just need to identify what is the risk presented by the ratio or what is the risk presented by a percentage increasing or decreasing. I hope you're all getting my perspective here. So have you seen how much difference has come in between the December 20 exam and the June 21 exams in terms of the way the numbers have been presented? Have you seen the change? How the financial data was presented in December and how the financial data was presented in June 21. I hope you appreciate that. So if you just look at the way the financial data was presented in December 20 versus June 21, I believe you get the mindset of the examiner. I hope you get the mindset of the examiner. So the way the financial data was presented in December 20 versus June 21 speak or indicates what's going in the examiner mind, indicates what's going in examiner mind. That means examiner wants now in future exams the results will be presented which will already be converted into percentage changes, or into ratios, and the student should only evaluate or interpret results presented to identify the risk. So I think what the examiner has done from December 20 to June 21 indicates what's going in the examiner mind. And I believe that from the September 21 exams, one step will be eliminated. That is, you convert results into percentages and ratios. Rather, the results will already be converted into percentages and ratios, and you just need to evaluate what is the risk inside them. I hope you agree with me. But see, this is just the reading of the mind. I might be reading the mind of the examiner in the right manner or the wrong manner. But somewhere in the future exam setting, whether it is September or December, you will be presented with a dashboard. You will be presented with a dashboard. So sooner or later in your AAA paper, you will see something like this, right? Sooner or later, you will see something like this in the AAA paper, and you need to evaluate the result. Where is the risk? You need to evaluate where is something rising or falling. I hope every one of you is getting clear with what I'm trying to say. Now, just let me give you a glimpse here. Look at this June 21 exams. See the operating profit. You look at the operating profit of the company, right? And the operating profit has increased by 4.8%, whereas the profit before tax has increased by 30%. Is there a risk? Is there a risk that certain expenses are misallocated between certain expenses are misallocated? The operating profit has increased by 4.8 and the bottom line, the profit before tax, has increased by 30. Is there a risk that certain operating expenses has been understated or certain operating expenses has been misallocated between operating profit and profit before tax? Is there a risk of understatement of expenses highlighted through 30% rise in profit before tax? I hope you remember this March June 21 question. There was a change in the fair value of $70.5 million. What if the management has not recognized the changes in the fair value of $70.5 million in the P&L? That could have converted the profit into loss. I hope you remember the question from day 2, day 3. So, examiner can present you results with percentages given, but you need to think what is the risk behind the percentages, or what risk examiner wants you to pick up behind the change in percentages. So the results in the question number 1, is that a mandatory part? Can you find a question number 1 without a financial statement data? Tell me, yes or no. Can you find a question number 1 without a financial statement data? No. But the way the examiner present the financial data, will that possibly change from September or December exams? And can the examiner present you results in a different format and expect you to evaluate it and interpret it? Is that right? So please be sure that whatever I have written with you on the Word file, just give me 1 minute, sorry. Whatever I have studied with you on this Word file, in terms of data analytics, the article, the YouTube session, the changes. I hope you're all familiar with changes now. I read every bullet with you. I tried to explain every bullet to you. And I read the mind of the examiner, that the examiner wants you to evaluate and interpret the results generated. So the results will be generated, means the results will be given to you. You just need to evaluate and interpret them. They will be given in a variety of formats, but obviously the ICAEW papers are confidential. They're not publicly available. I could not have shown you, but I've just shown you some pictures to give you an illustration how things could look like in the future exams. It's not you will get something like this in September exams. Quite possible examiner might publish a new specimen exam before examiner tests this in the December exams. That's also very possible, right? So please ensure that you know how these changes can impact your September 2021 exams. That's one and very important thing. The next thing, if you're clear with this, you move to the last aspect of data analytics. As a student, when you look at the article, data analytics article, you should read the article, please. You cannot avoid reading this article because this article can still be examined and the examiner can ask you anything from this article. Now, just to give you a glimpse, in the September-December 20 exams, which you can see right in front of your screen now, and you look at the question number 1 of the September-December 20 exams, look at this, the 5 marks requirement. The 5 marks requirement asks you, respond to the request regarding the use of data analytics to enhance audit efficiency, effectiveness, and the quality of the group audit, 5 marks. So examiner is asking you that you need to respond to the request of the management that the use of data analytics will really enhance audit efficiency, will really enhance the audit quality, and will really enhance the audit effectiveness. 5 marks. Now, when you look at this question for 5 marks in the September-December 20 exams, that the use of data analytics enhance audit efficiency, quality, and effectiveness, which is true, examiner was just testing your knowledge that you know that the use of data analytics do result in efficiency, do result in effectiveness, and do result in quality, because this was given right in the examiner article. You read the examiner article, it tells you what is data analytics. So you can read that on your own, right? What is data analytics, right? You go down, it tells you what are the uses of data analytics. And one of the use of data analytics is that how you study the financial statement and how the financial statement is converted into a dashboard. You read it out yourself. How can data analytics be used by the audit firm? I just give you a glimpse of that how can data analytics be used by the audit firm in terms of risk assessment, in terms of interpreting the results, evaluating the results. See, it is given over here. Modeling and visualization. Modeling and visualization for the purpose of planning and performing the audit. Have I given you a picture showing you how modeling and visualization is done of the results, which helps auditor with planning? Have I shown you the modeling and visualization picture? So examiner can pick things up from this article and formulate a revised question number 1 for you. So it's very, very important for you that you read this article word by word and then realize my lecture today, and both will sync together. Okay. In this article, the examiner has given you some of the procedures you can perform using data analytics. What if in the September 21 exams, examiner asks you the recommend the audit procedures you should perform using data analytics? So should you know the procedures, examples of data analytics from this article? Please read through the procedures. I've already covered these procedures in my YouTube session. I've already explained them. Please watch that. But you cannot afford to ignore critical paragraphs from this article. Benefits of data analytics. This is what the examiner asks for in the September-December 20 paper. That what are the benefits of data analytics in improving the efficiency, effectiveness, and quality of audit? And every benefit you will write in the September-December 20 exam will give you 1 mark to a maximum of 5 marks. So please read this article word by word and be sure that you know everything from this article. I hope you will do it. So is everyone getting a clear picture of the syllabus changes? Is everyone clear with the analysis I done around the syllabus changes? And is everyone clear that you have to read this article, data analytics, and you have to watch my YouTube session on data analytics? Is everyone clear through and sound? Okay. Now I just have 20 more minutes, and I just want to spend this 20 more minutes on something important with all of you. I just want to spend this 20 minutes because tomorrow will be the last day, and I just want to spend this 20 minutes on discussing one thing of which I will not get time tomorrow. Practice platform and how confident you are on using it, right? Now, in my last webinar and in my this webinar, wherever possible, I use the platform, right? I did the drafting of some answers on the practice platform. I used the exhibit readings on the practice platform just to guide you. Now, I believe there are two things or three things which needs attention. Number one, use of shortcuts like copy, paste, undo, and redo. They're very, very beneficial in a computer-based exams. I hope you all agree with me. I hope you know the shortcuts of copy, paste, undo, and redo, because that really benefits when you're writing your answer. You might need to copy something from the exhibits to the word processor. You might need to paste something from the exhibits to the word processor. You might need to undo something. You might need to redo something. Mistakenly, you deleted something and you want to redo that. So please ensure that you use of the shortcuts is very important, and that can really benefit you in a computer-based exam, number one. Number two, formatting. You know there is an option of bold. You know there is an option of italics. You know there is an option of an underline on a computer-based exams in your word processor. Now, you can write a heading briefing note and you can make it bold. Will that become more presentable answer? Will that become more presentable answer? So, uh, can you have an inferior quality presentation in a computer-based exam? You cannot have a lame excuse. You're not giving a pen and paper exam, right? In a pen and paper exam, your handwriting could be very bad. But in a computer-based exam, your handwriting is good because you're writing it on a computer. But can you make your answer presentable by making the headings bold and underlining them, making your answer presentable? So use the formatting, use the shortcuts. You should know the shortcuts of bold, italic, and underline, because this will really make your presentation better in the answer. That's number two. Number three, use of on-screen calculator. How many of you are comfortable with using the on-screen calculator? Because I believe none of you are. Every student prefer to use his or her calculator. How many of you are comfortable with use of on-screen calculator? Tell me. Okay, one student is saying so far I prefer on-screen. Okay, use of on-screen calculator is flexible from student to student. Some like to use an on-screen calculator. Depends how much time you spend on computer or laptop back at home or in your office. If you are an office-based student, you go to office, you use laptops, you use computers, you use on-screen calculators, you are comfortable with using on-screen calculators. Otherwise, you're not. So you need to take a decision that will you be using an on-screen calculator or your own calculator, and then practice using that in the next 1 month. Next decision you have to take, use of Scratchpad. Now, some students might be very comfortable using a Scratchpad, because if you use a Scratchpad, you need to open another window for it. And then you need to manage the window. You need to at times move the window on the left. At times you need to move the window on the right. So you need to open another window and then manage it. Now, will you be using a scratch pad? Again, this is something flexible. I did recommended you on the day one that if you want to do any rough workings or you want to do any rough workings, directly do them in the word processor and delete them after. I hope you remember my day one. Delete them after. I find this more time saving as a tutor, and I find this that you need to open less windows then. So check yourself in the next 24 hours whether you are comfortable opening a scratchpad and dumping rough workings in scratchpad and then copying things from the scratchpad to the word processor. I believe that is an extra step, that is an extra window, and I really get confused with it. So I prefer one window, putting everything in one window and then deleting the rough working at the end of the day from the word processor, right? If you forgot to delete Javed, at least put the heading on top of it, rough working. But please, please, please do delete it. I would not prefer you forget, delete it, right? The next thing, the rough working in the word processor and the use of the scratchpad, you have to take a decision on that, whether you will be going for it or not. Now, the last thing, I think there is no other command that you know how to use the highlighter, you know how to annotate things, right? That's something perfect and easier one. But I think there is something of a confusion between a scratch pad using and a rough working on a word processor. So I prefer that you go with a word processor, and that would be more better. The last thing, managing multiple windows on the computer screen or platform. How many windows can you manage at one point vary from a student to student? Some students, see, you need to keep one window open every time. That is the word processor, right? And with word processor, you will keep opening the requirements and exhibits, and you will read requirements and exhibits and copy paste things from them to word processor. So I think word processor window will be very static, but the other windows like exhibit, you open one exhibit, you close it. You open another exhibit and close it. So I believe when I use practice platform at home, so I normally have maximum two windows at one point. One is the word processor, the response option, and one is an extra window either of a requirement or either of an exhibit, the one I am reading. So I think two windows is the maximum you can have on a screen at a time, not more than that. Is that clear to all of you? Managing multiple windows on computer screen or platform, not more than two windows at a time. I hope you know how you can reduce the window size, how you can move the window from the left and right? I've shown you that multiple times in my previous webinar. Just let me show you that. See this. This is my one window, right, which is the word processor. This window will keep open every time. And then I have to see the draft financial statement, so I'll open it up. The draft financial statement come in front of my word processor. I use the draft financial statement, then I close it. And I come back to my background. I open up the notes. The note comes in front of my word processor. I copy something from my notes. And I close the window. I come back to my word processor and paste it over here. Control V. So one window has to be opened every time. Now it's up to you whether you want to keep this word processor window on the right, on the left, on wherever. But you can reduce the size of this window like this. Some student like a small window. Some student like this long window. See, this is vertically long. This is horizontally long. Now you want to have a horizontally long window, vertically long window, or this. I think this is best position. Keep it this way. Vertical long window, one here, and then you open the draft financial statement. And you keep them here. See, now they're both going together. On the right, you have a very good looking word processor, vertically extended. And on the left, you have an exhibit. You close the exhibit, you open the next one, notes, and you arrange the notes like this. And you reduce the notes zoom and see how the notes are looking good now. So you can just keep things this way and make your workplace tidy. The tidy workplace, the better for you. But because if you have draft financial statement open, notes open, requirements open, see how messy this how messy the workspace is, and you will become stressful in exam paper if you have a messy looking Word workspace. Is it looking messy if you open so many windows together? Please don't have a messy looking workspace because that will increase the stress level. So close windows, keep just two windows open at a time. One is the word processor and the other whatever window you want to keep. I've already given you guidance about Scratchpad. I've already given you guidance about the calculator. Strike through, I don't find any relevance of a strike through, just ignore it out. One thing which is very important if you're using the word processor, just give you 1 minute. If you're using the word processor, one thing is very important. In the word processor, you can make use of the bullets. So if you're writing something, you can put them in bullets like a procedure. You can put procedures in bullets. Evidence in the working paper file, you can put them in bullets. So wherever you want to use a bullet, you can use the bullets. You want to use the numbers, you can use the numbers. That's very possible. You want to insert a table, you can insert a table. But I don't find any use of a table in the AAA paper because in a pen and paper exams, we never use a table. And there is no relevance of using a table so far, so forth in the AAA exams. So I think you should be familiar which commands you will be touching upon and which commands you will not be touching upon. So as a student, make a final list. Which commands will you be using and which you will not be. So when you go to the actual exams, you know exactly which commands you are touching upon and which not, and you know the shortcut keys of the command. I hope you're all clear with this, and I hope this exercise will make you confident because I've used the practice platform scattered over the 3 days, and I've also used them in my June 21 webinar. Right? I hope you're all clear on this. Now, the last thing for the webinar today. Tomorrow, when we meet in for the last day of the webinar, I hope you can see that on your screen. When we meet up for the last day of the webinar, will be focused on another assignment, which is review of prospective financial information. I have given less time to this other assignment in my previous webinar. I've covered due diligence, forensic, and audit of performance information, but I've given less time to this one. So, and this has come very regular in the past paper. So I want to spend a good time tomorrow on review of prospective financial information, as in like half the session. Then I think 1 hour of the session tomorrow will be very, very important because I will be giving you some very focused exam tips for September 21. Uh, I'll try to make a summary of tips which can really be beneficial for you when you want to excel in the upcoming September 21 exams. I'll give you very focused tips and techniques for September 21 exams, what to do, what not to do, where to focus, where not to focus, what should you be doing in the next 1 month, what sort of a timetable you should be structuring, how you should go about revising things up, how much time you should be spending on the past papers, examiner criticism, the things you should be avoiding on the day of exam, and much more. So don't miss the session tomorrow because the session tomorrow will be really, really important as we look into the exam techniques for September 21 along with the review of prospective financial information. If you can just quickly drop the feedback of the session today and overall 4 days, how the 4 days have been. Have they really benefited you as a student in terms of learning something for September 21 exams? Has the 4 days helped you find the right track, the right strategy for September 21 exams? That will be really, really encouraging. So if you can just take a minute and drop the feedback of the overall webinar up to the day 4 and individually for the 4th day, that will be really, really beneficial. And if you have any question and answer, I have 10 more minutes. so I can really coordinate with you in terms of your Q&A. So I'm now focused on the screen, and let's see how many questions I can answer. Okay. Okay, a question from Pratik. If we quote a figure from data analytics in our answer, we will receive the extra 0.5 marks. Pratik, the answer to your question is yes. Uh, Summer one, how professional marks will be rewarded. I have guided about them in my previous webinar, the 4 professional marks. That's around the briefing note and how you structure the briefing note. I think in my previous webinars, June and December and March, I have given a careful breakup of the professional marks. So if you can catch upon that, would be great. Right? I hope you got my answer. Tayyip Sheikh, can we question from other areas not discussed today? Yes, you may. Yes, you may. If I have time, I'll answer it. Do you provide a marked mock exam, please? No. As part of my regular courses, I do check assignments of the students and I give constructive feedbacks on students' assignments. Is CAM applicable for public interest entities? Sanjay, yes. CAM is applicable primarily for listed company. The company has to be listed. That is very, very important. Will the word processor be saved when we close it? Yes. The moment you, whatever you write on the word processor and you close it, everything you have wrote is saved. It will not get lost. Don't be worried about it, right? Everything you write on a scratch pad or a word processor will not be lost. Eldrin, yes. If you are running out of time in the last 10 minutes, and instead of writing things in a paragraph, you start writing things in bullet form, that's very good. At least you get half a mark for writing a bullet. So instead of going with paragraphs, so in the last 10 minutes, that's a wonderful strategy. Yes, if the company is not listed, then CAM is not applicable. That's perfectly right. Tayyip Sheikh, yes. If the question says the client has done something wrong, the client has done a wrong accounting treatment and the question is on risk, then definitely that wrong accounting treatment is a material misstatement. So it is a material misstatement if the client has done something of a wrong accounting treatment. So you will include that as part of your ROM. I've already given the previous webinar links, right? And in my September 21 webinar, Nakita, right? If you watch my 3 previous webinars, Nakita, you will get a webinar on procedures and evidence as well. Yes, subsidiary auditor and component auditor is one of the same terminology, right? Whoever asked that question. Ruth, I've covered the specific way of paragraphs in the audit report, the order. I think I have. I'll share in the WhatsApp groups the illustrative report, so you know the order of paragraphs, which paragraph comes first, which paragraphs come second. So I'll share on the WhatsApp group an illustrative report for the orders. Yes, Molly, the marks for materiality in question number 1 are now capped up to 3. Previously, it used to be 4. James, I've already given you how data analytics will be evaluated. I just spent 1 hour on that, how data analytics can be evaluated. Because the results will be given to you and you just need to evaluate the results. The percentages will be given to you and you will evaluate what is the percentage demonstrating in terms of risk. Or even if you are given a graph, from the graph you will pick what is increasing or what is decreasing, and then you will justify, is the decreasing a risk or is increasing a risk? Okay, I think that is it for the session today. Thank you very much. There were loads of questions. Again, it's humanly impossible to answer all of them, but really thankful for your feedback you've given to the webinar, and really thankful for your support and your participation in these webinars. And your enthusiasm. I wish you all a very best of luck. If any question is unanswered, please put them on the WhatsApp group. If you want to do any request, you can do the request on the WhatsApp group, and I'll be looking after the messages on WhatsApp group after I end the webinar tomorrow. Tomorrow is the final day, so don't miss it out. Lots of important things will be discussed tomorrow, not just the review of prospective financial information, right? Thank you very much. Have a nice day. Study effectively. It's your tutor, Kashif Kamran, signing off from the day 4 of the AAA September 21 webinar being organized by ACC Pakistan. Take good care of yourself. Goodbye and Allah Hafiz.